This morning, we'll reflect on the strength in global stock markets last week and the key reasons for this. If we start with the US market, the US was up 2% last week. That's the second consecutive week of strong gains. Last week, much of this strength was a result of the relief breathed by the market after China and the US agreed to return to the table to discuss trade tariffs. This was helping just outpace some of the concerns which were seeping into the market around the Trump-Musk feud, which is ongoing. We also had some very strong earnings reports coming through from key technology players and examples of the build-out of operations, Meta being a key example there as they look to extend their energy contracts to support the build-out of the artificial intelligence operations which they have in place there. We had some mixed messages from the labour market if we look at the economic data. We started the week with slightly weaker data around the employment market, which got the market a little bit concerned that the economy was starting to slow. But by the end of the week, we had the ADP report, which painted a much more robust picture in terms of expansion of jobs, particularly within the service sector. We also saw the unemployment rate remain at 4.1%, which is near historic lows. So what it's demonstrating is we are seeing a bit of a cool down in the labour market, but it remains in good health. It's coming from a very strong position, and that's crucial for the US. Consumer spending is a massive component of economic growth, so this is going to be a key one for us to watch. And as a result of this, we saw US Treasury bond yields move higher in terms of the reaction there. If we look at the ISM PMI readings, this really just gives us a bit of a feel for sentiment in service sectors, but also in the manufacturing sectors across corporate America. And maybe unsurprisingly, if we look at the manufacturing sector, this is one of the key areas where we are seeing weaker sentiment, and it's because they're seeing increased prices of production, they're seeing a slight slowdown in terms of the demand, and this is making them a little bit more cautious about taking on additional workers. In the service sectors, things were a little bit more robust, but for the first time in a year, the service sector dipped back into contraction territory. And one of the key aspects which is overshadowing sentiment in services is unsurprisingly the tariffs and the uncertainty which we still have around the direction of travel there. So manufacturing is weaker than services. Services remain the key component which is supporting economic growth along with the labour market strength, which we continue to see there. In terms of Europe, we saw some important developments. One was inflation, which was slowing down, and as a result of that, the European Central Bank lowering their interest rate by 0.25% down to 2% now, and the equity market responded positively as a result of this. Christine Lagarde, who's the president of the European Central Bank, did caution that this may be the European Central Bank getting towards the end of that interest rate lowering programme. Bank of England also just signalled a little bit of caution in terms of the pace in which they'll be taking their interest rates down from here, just given uncertainty around the impacts of tariffs and what that means for economic growth and inflation here in the UK. And just overnight in China, we received further confirmation that China remains in a deflationary environment. We're seeing slowing economic growth and we're actually seeing falling prices, and the evidence of that comes through the CPI report, which demonstrated prices or inflation fell 0.1% year over year in May, and actually the producer prices, so what's been paid at factory gates, that also fell 3.3%. So it's one of those unique areas where rather than positive inflation, we're actually seeing negative inflation. Prices actually fall in China as well. So there's a lot of areas for us to keep an eye out for this week. In the US, it will be the ongoing discussions with China and the US on trade, as well as other key trading partners. We'll no doubt hear a lot more between the dispute of Trump and Musk, but we're also going to get some important inflation updates, which are well worth keeping an eye out for. We'll hear inflation updates from much of the emerging market bloc, Mexico, Brazil, Russia, and India. So some key areas to look out for. Please do stay tuned here on Morning Markets.
This video is not a recommendation or personal financial advice. With investing, your capital is at risk. Investments can fluctuate in value and you may get back less than you invest.